think that every investor ought to be considering putting some money into equities at this point.
You know, having researched, I know you've researched these panics of the last last century, really. In each of those instances, how much did stocks come back? I mean, what was your return? What was the return?
Well, what we looked at is the worst market performance on a 10-year basis. Most people don't think or didn't think that you could lose money in a 10-year basis in the market. And we looked at every 10-year period going back, measuring quarter to quarter, going back to, about 85 years. And on average, the next 10 years produced returns of an average of about 180%. I mean, in even shorter term, this market is, as you mentioned, is severely oversold, but we've seen oversold markets before. But I think you're going to be looking at a rally here this year that's going to carry you up to at least, in the S&P 500, at least 1,000, and probably up about 50% from where we are now. And that's my minimum expectation for 2009. Your
minimum expectation, wow, that is quite optimistic. But Steve, you have called yourself before a bull, but also a bull who's been wrong. Is that still your assessment or no?
Well, yes. At one time I was known as a perma bear because I was always negative about the market. That was back in 1999 and 2000 when we were seeing that lunacy in technology.
Then, Steve, you know, back in 1980, eons ago, you had said when interest rates were at 15%, we'd get down to 5%. Nobody believed you. Lo and behold, that's what happened. We're at 0% interest rates right now. Steve, where is inflation going to go? Where are interest rates going to go? And what does that mean for gold?
We see the CPI and the producer price index, which are the two common ones. They're both around 0 or a negative 1%. We expect to see in the first half of this year both of them moving into deflationary territory, probably no more than 2.5–3% deflation, but then an acceleration in the last part of 2009 and bringing us back to mild inflation for the year. Longer term, I am very concerned about inflation because of the tremendous amount of stimulus that's been injected into this economy. Money supply and programs and fiscal policy. And if something doesn't happen to mop up that liquidity, excess liquidity, say in the next 3 to 4 years, we could be in real inflationary trouble, dollar debasement inflation. And that's why I'm reluctant to say I'm a bull for the next 10 years, because a lot of it depends on the responsibility of our politicians 3 years from now.
Okay. Thank you so much, Steve. And very quickly, buy or sell gold? Buy?
Well, if they don't get their act together in Washington 2 or 3 years from now, it might be a good idea to buy some gold right now as a hedge. But our target is around maybe $850 or something before we'd add gold to the portfolio, a little below where we are now.
Okay, Steve, had to get that in. And thanks so much. Great to have you with us. Steve Leuthold, CEO of the Leuthold Research Group.